Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, November the 8th, 2012. We'll be looking at the Dow Jones Industrial Average today. For those of you guys that would prefer, look at the S&P. This is basically the exact same chart. Overall chart pattern is basically the same, so it wouldn't matter which one I looked at. They're both going to tell you the exact same thing. Anything I say about this chart, I could apply to the other chart as well. Also, you can always go to the free website at PerfectStockAlert.com and check out all the charts that I keep there and update every single night. My personal charts are kept on that website for your review, and I recommend you check them out nightly because I advance stop loss limits and so forth and so on, and show new opportunities on other charts and things like that. They're always updated by 5 p.m., so you can check them out whenever you like. The main thing I want to bring to your attention here on the Dow Jones Industrial Average, and really the global markets that you need to be thinking about right now, is right now that we are trading below the lower Bollinger Band line. Typically, you start to do that, and you start getting in a situation where you get closer and closer to a bounce scenario. Whenever you start trading below that, you start looking for that to happen. And so we're looking for that to happen now, not necessarily tomorrow, it doesn't have to be, but going into the end of the week, there's going to be people who are short, who want to take some profits off the table and things of that nature. So you can see an argument for we could start to stall here or the next day or so forth and so on. We're close to a bounce scenario. That's fine. And what you need to know about that bounce is, like we talked about back during this time period, when you have a formation like we have now that is not a hammer candlestick formation, just like we had back here, it was inverted hammer. I told you that that tells you a great deal about the overall scenario. In this case here, you pull back here, you get a hammer candlestick. Of course, you were still in an uptrend, so pulling back to the 50-period moving average with a hammer candlestick formation gets my attention as a buy opportunity. That's what we told you to do here. That's what happened. It makes perfect sense. In this case, it's different. You're starting in a downtrend, right? You've turned from the uptrend to a downtrend. Now we're looking at short situations being the best opportunities at the 50-period moving average, this red line right up here. So now that we're looking at that, we see every pullback when we look for particular things. The first thing I want to look at is the candlestick formation going to be a hammer candlestick? Well, you can see right now it's not. So if tomorrow, Friday, were to be a bounce of any sort, I would know that this is not a true bottom. So the bounce would be short-lived, we would roll over, and I would take that as another short opportunity. Right now, if you're not already short, which you should be, we've been telling you guys to be selling for a while now. I'm actually back here. So you should be. If you're not, wait for the next bounce to get short. And the reason why your next bounce isn't something you want to be buying is simply this. You have two scenarios right now. When we're looking at the fiscal cliff, we're talking about the fiscal cliff in the U.S., you have two scenarios. You can either raise taxes to increase government revenue, and that will increase government revenue, or you can lower taxes. That will also increase government revenue simply by promoting growth in the U.S. However, we know Obama hasn't really been a big supporter of business, and so we would expect him to choose the other option, that he would simply say, okay, I'm going to raise taxes. By doing that, he's going to, in effect, push the U.S. back into recession, maybe even a worse recession. We don't really know how deep it'll be depending on what exactly he does. So when you see markets rally on a day or two, like you saw back here, basically people are saying, hey, look, buy this stock or this market simply because we're fixing to go into a recession. No, you would not buy in that scenario, would you? No, you wouldn't. You would, in fact, be selling. So that's basically what you're looking at. You're looking at the fiscal cliff as being that argument. Should we or will we cut taxes to actually stimulate growth? Probably not. Should we? I think so, but that's just my personal opinion. In any event, the main thing I'm looking at here at this chart is you want to look for short opportunities. You have yourself in a downtrend. You have fundamental reasons supporting that downtrend. There's no reason to be a buyer of this market or any other. If you've not been to the free website at PerfectStockAlert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. I want to point out one more little detail here, and as you guys know, on Friday I'll cover all 19 major markets in our nightly market analysis video, so you guys know everything I know moving to the week ahead. But the main thing you need to think about whenever you're looking at any chart is the overall trend. That's the number one most important element. In this current situation, we have this move going on right here. Okay, when we try to bounce here, made a lower low here, bounced lower high, and we're going like this. As long as the trend is down, you're making lower lows and lower highs, you do not want to attempt to buy a market. If she's going to turn, you will see it happen. You'll start to see a higher series of lows and higher series of highs. Until that happens, you want to remain bearish. There's no other argument. It's from a trader's perspective. Always go with the trend, all right? Now you know. God bless, take care, see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.